Hello friends, welcome to my YouTube channel. This video is about the analysis for the coming week on Forex, gold, dollar index, bond yields, GBP S&P 500 and you can see this is the Forex factory calendar. Tomorrow is Monday, Jan 29, so there isn't much data released tomorrow, and on Tuesday you have Australia retail sales, and Tuesday evening around 8:30 p.m. you can see there is an important data from the US, that is CV consumer confidence. So, and again it is a very important in terms of, because the strong number will again reflect on the economy. So CV consumer confidence and Jolt's job openings, if these numbers are higher than a forecast, which is a good numbers for a strong economy, then definitely S&P 500 there will be impact on dollar index, bond yields, and S&P 500. So you need to keep a watch on this data release 8:30 p.m. CV consumer confidence and John's job openings. If these numbers are good, then the dollar index will shoot higher, bond yields will tend to perform higher. S&P 500 might make a correction from the top. So if these numbers are negative, this number comes negative, then which is a good thing for the economy from the Fed point of view, because the bond yields will drop, dollar index will drop, and also the equities and S&P 500 index will rally. So on Wednesday you have an Australian data release. There is a CPI, Q by Q, CPI, Y by Y, which is also very important data release from the Australia. So if this number is again above than forecast, then definitely this is good for the Australian currency to buy along with the other pairs. And there is also an important data from the CNY, Chinese yuan. If the manufacturing PMI is good, which is a good thing for Chinese economy, if the manufacturing numbers are good, then definitely Chinese market, there will be definitely boom in the Chinese market. If the Chinese market is good, definitely that will have some reflection on the stock market as well, because China is a major trading partner for US. Also, there is on Wednesday you have an Euro German prelim CPI. This is also very important. If the CPI number is good, which is good for the euro, and if the number is negative, then below than forecast, then definitely this will be a selling opportunity for euro. And in the evening you have a very important US ADP non-farm employment change. This data won't have much impact, I believe, because you have a very important data on Friday, which is NFP. So this Thursday and this Wednesday, this ADP non-farm employment change doesn't have much impact. But when it comes to the later session, you have this employment cost index, which is important again. And the early hours of Thursday before New York closing, there is the important meeting from data release from the US, that is the federal funds rate, FOMC statement, press conference. This is a very important meeting, and all the analysts are expecting no change in the federal funds rate. So, but you might get some change of language or any clarity from Federal Reserve regarding the rate cuts. So you need to keep a watch on this data release, 12:30 p.m. 12:30 a.m. around in the midnight. And on Thursday you have a very important release from the Bank of England, also as well GBP, Bank of England monetary policy, policy summary, bank rate words, official rate words, and all the analysts are expecting no change from the Bank of England. But you need to look at this number very to 306207. What does that mean? This means the first number is how many members voted to increase interest rate. The Second number is how many voted to decrease. Third is how many voted to hold rates. First one is increase. Second one is decrease. First number is increase. Second number is decrease. Third one is hold. Previous meeting was 3 members was in favor of interest rate hike. 0 members were on favor of decrease. Only 6 members were in favor of hold. That means out of 9, 3 were on increase, 0 were in decrease, 6 were hold. But forecast is showing 2 members increase, 0 members decrease, 7 on hold. That means 1 member has not shown any interest in increasing the rate hikes. That means if this is the same expected as forecast, or even though if it is even lesser than like 207 or 107, then it is a good then this is a good opportunity to sell British pound and sell GBP USD pair. Any pair GBP you can short, but if this number is below than forecast or exactly equal to forecast, because 1 member is not favoring in terms of rate hike, and you are not expecting, many analysts are not expecting any change from Bank of England. The rates are expected to remain same. So most probably I am expecting the GBP to go on a shorter levels to fall further, maybe 126, 125 levels. You need to keep watch. There won't be any surprise from Bank of England, like increasing the rate hikes and giving a surprise to the market. Not expecting money much, but certainly the market will, when there are any announcements from central banks, any rate decisions, the market tries to initially push higher levels, but later on end of the day and later sessions it will try to go down lower levels, test the lower levels only. So this will be a good opportunity for GBP shorting. And around in the 7 p.m. you can clearly see unemployment claims, which is an important factor. If this number is higher, that means it is negative. Negative means dollar weak. If this number is below than forecast, which is a good thing, good number means strong dollar. And you have an important data on Thursday around 8:30 p.m. ISM manufacturing PMI. This is also important data in terms of US dollar. If the data is good, example, if the data is above 47, above than forecast, if there are any revisions, and after revision still the data is above than forecast or below than forecast, it will impact US dollar, because manufacturing PMI is also very important. And coming on Friday, you clearly see the very important event of the day. It is a non-farm payroll, NFP, unemployment rate slightly higher above than previous figure. Forecast is expected to shoot higher 3.8, but if the forecast is around if the actual figure is around 3.7 or below than 3.7, it is a good number and a strong dollar. If the NFP is around 200k or above, which is again a good number, the main focus will be on average hourly earnings, which is very important. Previous 0.4%, forecast 0.3. If this number is 0.3 or 0.3, about 0.3, like 0.4, which is a good thing for strong dollar. If this average hourly earnings is below than 0.3, that is not good for dollar. Dollar will index will be coming down, major pairs will rally, bond yields will fall. So main important thing here is the average hourly earnings shouldn't fall below 0.3. NFP should come around somewhere around in the 150 to 200 range. Unemployment rate study around 3.7 to 3.8. If that is 3.6, and if it is 150 plus number and zero point 0.4, which is a good number. If this is 0. Average hourly earnings below than forecast, like example 0. 0.2 the number, and below 150 employment change number, and unemployment rate remains around 3.8, which is a good number in terms of Fed, but it is a negative number for dollar index. So dollar index will be weaker. And again in the evening 8:30 p.m. there is an important data from USD, revised UOM consumer sentiment. If this is number is good, definitely it will be good for the dollar index. So this is the Forex Factory calendar. You can go to the forexfactory.com. You can just check complete Forex Factory calendar this coming week. There are a lot of important data from the US and UK, services PMI, Australia, German prelim CMI, all these things. Coming to technical analysis, so this is gold chart. So first we'll look at the dollar index. Dollar index already broke above this trend line, so maybe the dollar index will try to aim for this level around 104 in the coming days or weeks. Maybe this level might test, so the dollar index might try to outperform. This is dollar index. And coming to bond yields already has tested this important level 4.183, and is slightly making a correction down this level now. So you need to look at the bond yields as well, because bond yields are very important in terms of gold movement. So if you are trading especially gold, you need to keep an eye on bond yields, US 10-year bond yields. So you can see that the bond yields has made a the bond yields has tested 3.793 level, and from here it is increased. You can follow this pattern bullish momentum. So and many of the analysts and other investors traders are expecting that the bond yields might slightly move up to this point 4.183 or 4.246. You might see some bullish momentum in the 10-year bond yield up till this level. On a longer run, bond yields will definitely fall below this 3 level, but for the time being, for this week or might this coming week or for a couple of months, the bond yields might try to test these highs, this resistance, this resistance. So because already it has tested this lower level and it has in a bullish mode. So the bond yields higher, the gold lower. The bond yields lower, the gold higher. There will always be an inverse relationship for the US 10-year bond yield and the gold price movement. So this is US 10-year bond yield daily time frame. Now we'll see on gold chart. This is gold chart. So gold is currently looking on a downside, because you can see that this support, it is likely to test this support again 2006 level, and you can see that it is following a downtrend pattern in the daily time frame. So it already tested this high 2085. It moved down again, it made a correction on 50 Fibonacci level, again it down, again it has made a correction 50 Fibonacci level. So you might expect the gold to fall further, at least around 2002 level or 1978 might. Depends upon the bond yields and dollar index. The stronger the economy, the stronger the bond yields, the stronger the dollar, then definitely the gold price will be lower. So in terms of technical, you can the chart is showing that the dollar, that the gold will likely be downside for quite some time, maybe in this coming week. So 2006, 2002 is the key level to watch, which is a key support, and again 1978. So for now, the long position is not yet confirmed. Only downside is most probable. And when it comes to the dollar index, as already discussed, it has broken about this trend line. So again, expecting this higher. Bond yields also still expecting bond yields to slightly go further higher. Gold will likely to test lower levels downside. And here comes the S&P chart, S&P 500. It's very important because the S&P 500 has already tested this important level of 48.93. It has broken a new record of 49.0504 level all time high, and it's in slightly trying to establish a correction mode, but still we can't know and we are not sure. It depends upon the data, if there is any language from the change of language from the Fed speakers, earnings, stocks performing, bond yields performing, all these factors considered are taken into consideration for this S&P 500 movement. The still analysts traders expect S&P 500 level to move higher somewhere around 5,000 5,500 level, but not an immediate note. It will take time. By the end of the year or else maybe next year, it will this S&P 500 will definitely outperform. But for now, time being this week or coming weeks, it already tested this higher level and made a new all-time high 49.05 and might establish a downside momentum for time being. Like you might expect some correction from this point to 48.30 or even 47.94. So you need to keep an eye on this S&P 500 index as well, which is an important factor in terms of viewers. So when a risk on mode, S&P 500 outperforms. In risk off mode, S&P 500 falls. So this is all about technical analysis and the important levels of S&P 500, dollar index, 10-year yield, dollar index, 10-year yield, gold, and I would like to show one more chart, that is GBP/USD, which is called cable. This is daily time frame chart. You can clearly see that the price is as rejecting this trend line multiple times, 1 2 3 4, and the price is trading in this trend line range. So once the price breaks above or below this trend line, then you can definitely expect the long side or downside depending upon the break of the level break. So but Thursday you have a very important risk event from Bank of England, where Bank of England might be dovish. So you might expect the GBP/USD to fall further if the BOE makes a dovish statement. So you need to be careful while trading GBP/USD, because it is also one of the high volatile pair. So that's it. This is analysis. Thank you for watching my video. If anybody want analysis in any language, not in any language like in Hindi or Telugu, please do let me know and comment in this video, so that I will try to make video in Hindi and Telugu language as well. Thank you.